Most traders step into the markets believing the key to success is finding that one perfect strategy, the magic indicator, the flawless setup, the system that never loses. But the reality is, that's not what separates professionals from beginners. The real difference isn't on the charts at all, it's in the mind. Because the market doesn't just challenge your technical skills, it pushes against your emotions. It tests your ability to stay patient when nothing's happening, disciplined when you're tempted to overtrade, and calm when fear and greed are screaming at you to act. If you can't control that side of yourself, no strategy will ever save you. That's why this video was created, not just as another piece of content to watch once and move on from, but as a tool you can return to whenever your psychology slips. Think of it like a reset for your trading mindset. Whether you play it before a session, after a tough loss, or even in the background while you trade or work, the goal is simple: to anchor your emotions, sharpen your discipline, and keep you steady in the markets. And if you ever need even more support, there's a playlist on this channel built specifically for trading psychology. You can let it run anytime you need to get back into the right headspace, and the repetition alone can rewire the way you think and act as a trader. For those who want to go deeper, there's also the Ultimate Trading Psychology and Secret Strategy Blueprint, linked in the description. Inside is a framework that combines the exact mental shifts traders need with a strategy that most have never even heard of, often the missing piece that finally makes everything click. And don't forget to subscribe. Subscribers get a chance to win a free copy of the blueprint. So, let's get started, because these are the trading psychology secrets you need to watch if you want to finally trade like a pro. When people first start trading, they're usually obsessed with one thing: finding the perfect strategy. They'll spend hours watching videos, buying courses, testing indicators, and scrolling through forums, hoping someone will drop the secret recipe that guarantees profits. But here's the truth that no one really talks about. Strategies don't fail most traders. Traders fail themselves. Think about it. If trading was only about strategies, then anyone with access to the internet would already be successful. There are thousands of free strategies on YouTube right now. You can download systems, read books, backtest setups, all within a matter of days. But if strategies alone worked, wouldn't every single trader who studies them be profitable? That's not the reality. Most traders still lose money. Not because the strategies are broken, but because they can't follow them consistently. And that's where psychology comes in. The real test isn't the market, it's you. The market doesn't know you exist. It doesn't care if you win or lose. What it does do is expose every weakness you bring to the table. If you're impulsive, the market will tempt you to overtrade. If you hate losing, it will trap you in a cycle of holding on to losers too long. If you're greedy, it will push you to risk too much, too soon. If you're impatient, you'll close winners early and let losers run. In other words, the market is a mirror. It reflects your psychology back at you. That's why so many traders feel like they're fighting against themselves, because they are. The casino trap versus the professional mindset. Most beginners unknowingly treat the market like a casino. They approach each trade as if it's a spin of the roulette wheel. Win or lose, it feels random. And with that mindset, they start chasing, doubling down, or abandoning rules after a streak of losses. But professionals, they don't think in terms of a single trade. They think in terms of the next 1,000 trades. Every decision is just one data point in a much bigger sample size. One trade doesn't matter. What matters is following their edge over and over until probabilities play out. This is the first major psychological shift. Stop thinking like a gambler. Start thinking like a risk manager. An example: same system but different results. Let's look at two traders who both learn the exact same strategy. They're taught the same entry signals, the same risk management rules, even the same targets. Trader A follows the system when it feels easy, but after a losing streak, they start doubting it. They skip setups. They cut winners early out of fear. They increase risk after losses to make it back. And slowly, the system breaks down. Trader B experiences the same losses, but instead of panicking, they stick to the rules. They see the bigger picture. They know their edge plays out over dozens of trades, not just one or two. They keep risk steady, their emotions in check, and their consistency intact. Same strategy, same signals, but two completely different outcomes. The difference, not skill, not knowledge, psychology. The hidden enemy, your own brain. Here's another untold truth. Your brain is hardwired to work against you in trading. It hates uncertainty. That's why you second-guess setups or hesitate to pull the trigger. It hates loss. That's why you cut winners short but let losers run. It craves excitement. That's why you chase trades even when you know better. In evolutionary terms, this makes sense. Your brain evolved to keep you safe, not to make you money in financial markets. But trading requires the opposite of survival instincts. It requires sitting in discomfort, accepting uncertainty, and controlling impulses. That's why psychology is not optional. It's not a bonus skill. It's the foundation that rewires your brain to trade in a way that's completely unnatural but absolutely necessary. Why psychology is the real edge. Think about the traders you look up to, the ones who are consistent year after year. They don't have access to some secret indicator you can't download. What they do have is emotional control. They've built habits that allow them to stay steady when everyone else is panicking. That's the real edge. Not the chart pattern, not the system, not the tool, but the psychology that allows them to use their system consistently without self-sabotage. And here's the crazy part. Most traders never get this far. They blow up accounts chasing systems, never realizing the missing piece was inside their own head. That's why they fail, not because they weren't smart enough, but because they never trained their psychology. The takeaway before we go deeper. So before you even place your next trade, pause and recognize this. The battle isn't out there in the market. It's in here, in your mind. If you can master yourself, the charts become easier, the setups become clearer, and consistency finally becomes possible. That's what the rest of this video is about. Breaking down the psychological secrets that separate amateurs from professionals. Because once you understand them, you won't just trade better, you'll start thinking like a pro. If there's one thing that silently destroys traders, more than bad strategies, bad entries, or even bad brokers, it's emotions, fear, greed, anger, overconfidence, impatience. These aren't just feelings you brush aside. They're the invisible forces that sabotage decisions in real time, often without you even realizing it. You can study charts for years, learn every technical indicator, memorize candlestick patterns, and still fail, because in the heat of the moment, your psychology takes over. Think back to your own trading journey. Have you ever exited a trade too early because fear told you it was about to turn against you, only to watch it hit your original target moments later? Have you ever held on to a loser too long because you didn't want to admit you were wrong? Or maybe you've doubled down recklessly after a loss, telling yourself you'd make it back this time. Or maybe you've sat at your desk impatient and entered a low-quality setup just because you were tired of waiting. If you're nodding your head right now, that's not bad analysis. That's your emotions hijacking your process. Why emotional control matters more than intelligence. Here's a brutal truth. Trading isn't about intelligence. Some of the smartest people in the world fail in trading. Why? Because the market doesn't reward who's the smartest. It rewards who's the most disciplined.
Think of it this way. Trading is one of the only fields where you can know exactly what you should do and still fail. You know you should cut the loser, but you don't. You know you should wait for confirmation, but you can't. You know you should stick to your risk management rules, but you ignore them. That gap between knowledge and action, that's psychology. And unless you close it, no amount of technical knowledge will save you. The professional's advantage: emotional detachment. Professional traders treat trading like a numbers game. Each trade is just a probability event. Nothing more, nothing less. When they win, they don't jump out of their chair and celebrate. When they lose, they don't slam their keyboard in frustration. They're emotionally detached. Why? Because they understand the bigger picture. They know one trade doesn't matter. What matters is the series of trades, executed consistently over time. Amateur traders, on the other hand, ride an emotional roller coaster. One win makes them feel invincible. One loss makes them feel like quitting. A streak of wins inflates their ego. A streak of losses destroys their confidence. This emotional swing makes consistency impossible, and without consistency, success is impossible. Breaking down the emotional traps. Let's break down the 4 main emotional traps that ruin traders. Fear. It pushes you to exit too early or avoid taking a trade altogether, even when your setup is valid. Fear is the emotion of what if, and it keeps you stuck in hesitation. Greed convinces you to take unnecessary risks, over-leverage, or over-trade. Greed tells you that one big trade will change everything. It won't. It'll usually end your account. Frustration. This comes after losses. It pushes you to revenge trade, trying to earn back what you lost in one reckless move. It's one of the fastest ways to blow up. Impatience. Probably the most common. You know you should wait for your setup, but your brain craves action. Impatience has traders pressing buy or sell just to feel engaged. Once you recognize these traps, you can start disarming them. Awareness is step 1.
How to train emotional control like a pro. Emotional control isn't something you just decide to have. It's a skill, and skills are trained. Here's how professionals build it. 1. Predefine every trade. Before you ever click buy or sell, you should already know where you'll enter, where you'll place your stop, where you'll take profit. This prevents mid-trade emotional decisions because the plan is already locked in. 2. Risk small enough to feel nothing. Here's a rule of thumb. If losing a trade makes your stomach drop, you're risking too much. The pros risk small enough that a loss feels like a scratch, not a wound. That's how they stay calm enough to execute consistently. 3. Focus on execution, not outcome. Most traders obsess over, did I win? The pros ask, did I follow my plan? Because in the long run, following the plan creates profits. Even if one trade loses, sticking to the system guarantees survival, and survival is the name of the game. 4. Journal every trade. Document not just the setup, but how you felt. Did you feel anxious before entering? Did greed whisper to move your stop? Reviewing this over time helps you see patterns in your psychology. 5. Use environmental triggers. Most traders overlook this. Something as simple as where you sit, what you listen to, or how you start your trading day can affect your mindset. Pros develop routines, meditation, affirmations, even simple breathing exercises to keep themselves centered before each session. The paradox of control. Here's the paradox. The more you try to control the market, the more frustrated you'll be. You can't control the market. You can't control when setups form, how price moves, or whether a trade wins or loses. But you can control yourself. The more you master your emotions, the less the market can shake you. And ironically, that's when your results improve, not because the market changed, but because you did. The big takeaway before moving on. Trading isn't about mastering the market. It's about mastering yourself. The market doesn't beat you, your emotions do.
And the traders who win consistently aren't the ones with the fanciest indicators. They're the ones who keep calm, detached, and disciplined no matter what's happening on the chart. If you can train emotional control, you're already halfway to trading like a professional. If emotional control is the foundation, discipline is the structure built on top of it. You can't build a career in trading without discipline, and you can't maintain profits without consistency. These two qualities separate the dreamers from the professionals. Most traders think they're disciplined, but the truth is revealed the moment their plan is tested. When the market dangles temptation in front of you, a setup that almost fits your rules, a gut-feeling trade, a chance to chase after a quick move, do you stick to your plan? Or do you break it? Just this one time. And that one time usually snowballs into the habit that destroys entire accounts. Why discipline matters more than talent. Trading isn't about who's the fastest learner, who has the best software, or even who studies the most. It's about who can repeat the same process day after day, month after month, without cracking under pressure. Discipline is what keeps you from taking trades outside your setup, moving your stop loss when price moves against you, over-leveraging because you feel good about this one, skipping journaling because you're too tired. Without discipline, all knowledge is wasted. It doesn't matter if you have the perfect strategy. If you don't follow it, it may as well not exist. Consistency creates the edge. Think of trading like flipping a weighted coin. If your strategy gives you a 55% win rate, the only way you benefit from that edge is by flipping the coin enough times. But most traders don't give themselves the chance. They break discipline after 3 losses, change their system after a bad week, or double their size after 1 win. They destroy their own edge by being inconsistent. The traders who win are the ones who can run the same play over and over again without letting emotions interfere. They don't judge success by 1 trade. They judge by hundreds. Consistency transforms probabilities into results. The psychology behind consistency. Here's the hard truth. The human brain is wired against consistency. Our survival instincts crave immediate results and instant gratification. That's why sticking to a process, even when it feels boring, is so difficult. Your brain screams, "Take action now," when no trade is present. Move your stop loss just this once when fear kicks in. This system isn't working after a losing streak. But here's what professionals understand. Boredom is a sign of discipline. If trading feels exciting all the time, you're probably doing it wrong. Consistency requires learning to be comfortable with repetition, patience, and delayed gratification. That's what 99% of traders never master. So how do you actually train discipline like a professional? It's not about willpower, it's about structure. Pros design their trading environment so discipline becomes automatic. 1. Create a trading plan that's non-negotiable. Your plan should detail exactly what setups you trade, when you trade them, how you manage risk, when you exit. If your plan is vague, your discipline will crumble. The clearer your plan, the easier it is to stick to. 2. Use rules to remove decisions. Every extra decision you leave open is a chance for emotions to interfere. Preset your risk per trade. Preset your max daily losses. Automate alerts when possible. Less thinking equals less room for mistakes. 3. Treat trading like a job, not a hobby. Professionals don't wake up and see how they feel. They show up, follow procedure, and execute. Trading isn't about mood, it's about process. You need scheduled trading hours, routine reviews, and structured breaks. 4. Reward discipline, not just profit. This is huge. If you only reward yourself for winning trades, your brain links success with outcome instead of process. Instead, reward yourself for following your plan, even if the trade loses. Over time, this rewires your mindset to value consistency. 5. Journal everything. Every trade, every thought, every emotion. Journaling makes patterns obvious. You can't improve what you don't measure, and you can't stay disciplined if you don't track whether you're slipping.
The discipline feedback loop. Here's how pros keep discipline strong. Plan, execute, review, adjust, repeat. Every single session, the cycle runs. If they break discipline, they don't ignore it. They note it, analyze why, and correct it. Each small correction compounds into stronger habits. Over time, discipline becomes automatic. It's no longer willpower, it's identity. Consistency in practice, a real example. Imagine two traders. Trader A has a system with a 60% win rate, but he takes trades outside his rules, increases his risk after wins, and skips trades when he's scared. His results? Inconsistent all over the place. Trader B has a system with a 50% win rate, not as strong, but he follows it to the letter, never breaking rules. His results? Steady growth over time. Who wins? Trader B. Because consistency beats potential every single time. The bottom line on discipline and consistency? Discipline is the bridge between knowledge and results. Consistency is what allows your edge to actually show up over time. Without them, no strategy will work. With them, even a simple system can become powerful. This is the mindset shift. Stop chasing the perfect trade and start chasing the perfect process. Because once you're disciplined and consistent, the results take care of themselves. So, let's bring it all together. Trading success isn't about finding the magic indicator, the hidden pattern, or the one strategy no one else knows about. It's about mastering yourself, your emotions, your discipline, your consistency. That's the real edge, and it's the edge most traders never develop. Because here's the truth, the market will always be unpredictable. Charts will shift, setups will fail, and losses will happen. But what never changes is how you choose to respond. The traders who learn to stay calm under pressure, stick to their rules no matter what, and show up with consistency, those are the ones who win long term. And that's why videos like this exist. This isn't meant to be something you watch once and forget. It's a resource. Come back to it before you trade, after a tough day, or even let it play in the background while you work. Let it reset your mindset and keep you on track. If you ever feel yourself slipping, you've got this video and a full playlist on the channel designed for exactly that. And for traders who want to go even deeper, there's also the Ultimate Trading Psychology and Secret Strategy Blueprint linked in the description. Inside is a framework that combines the mindset we've talked about with a strategy most traders never even discover. For many, that's the missing piece that pulls everything together. You can check it out anytime. Also, make sure to subscribe to the channel. Subscribers have a chance to win a free copy of the blueprint, and staying connected means you'll never run short on tools to sharpen your psychology and your edge. So remember this. Strategies may come and go, markets may change, but psychology, your ability to stay disciplined, patient, and consistent, will always be the difference between those who fail and those who finally trade like a pro.